Hello and welcome to our webinar, Industry Insight Purchasing Trends. My name is Hannah Kroom. I'm the Online Media Marketing Manager for Comdata, and on behalf of Comdata, I'd like to thank you for taking the time to attend today's event. I have with me today special guest Bob Sneed, Senior Vice President of Commercial Payments here at Comdata. Bob, thanks for joining us today.
Hannah, it's my pleasure. Thanks for having me.
We will take questions online throughout the discussion. We'll have a brief Q&A session with Bob towards the end of the hour. Feel free to ask any questions at any time by clicking the orange arrow on the right side of your screen to open your control panel and typing your question in the question and answer tab. I'd like to start the conversation today by asking the audience a question. What are the biggest challenges facing your purchasing program today? Phone lines are muted, so please respond by typing your answer into the question and answer tab on your control panel and hitting send. While we're getting responses from the audience, I'd like to go over our discussion guide, and today's discussion will cover trends in the commercial payment space, as well as drill down into trends that are more specific to the purchasing industry. Bob, I understand that you just returned from a meeting in New York with MasterCard and also recently attended the Commercial Payments International Conference. So I imagine that much of what you'll be sharing is influenced by what's on your mind following those two events?
That's right, Hannah. It was a full week in New York last week, and we did have the pleasure of meeting with MasterCard executives to gain some insights into their strategy, market opportunities, market concerns, how the playing field is rapidly changing today, and we'll share some of those thoughts with our participants today.
That sounds great. So let's go ahead and get started. Bob, let's start by taking a look at the commercial card market from a global perspective. What are we seeing in terms of the global commercial payment space?
Thanks for the question, Hannah. One of the things that we're seeing is that the global payments market topped $1 trillion in payments through commercial cards globally. That happened back in 2009. The numbers for 2010 aren't out yet. If you look at the commercial card business, excluding prepaid and debit cards, growth across North America is driven primarily by increasing settlement options associated with purchasing cards. So the growth in the North American market is very robust. If you look across Western Europe, you'll see that moderate growth is driven by more travel programs, some central travel account programs, as well as additional adoption of P-cards. When you take a look at Asia Pacific, you see double-digit growth in the Asia Pacific market, a very robust economy, and you're seeing the growth and expansion of T&E as well as purchasing cards. Latin America, it's relatively an immature market, but when you take a look at Brazil, Mexico, and Argentina, they're leading the way. Eastern Europe and the Middle East really do not provide commercial card solutions to their organizations. The issuing banks stay away from that in those particular parts of the world. One exception, of course, South Africa. They continue to innovate and see expansion on the continent. Take a look at the global recession that occurred last year really reinforced the need for organizations to manage spending in a more controlled environment. So CFOs and CXO level executives wanted to place tighter controls as well as implement stronger compliance and more effective analysis to ensure the strength of their programs. So overall, we're looking at growth across the entire global perspective, somewhere in the 10% range as we go into 2011 and 12.
Great information. What about drilling down a little bit closer to home? What are we seeing take place here in North America?
When you take a look at the United States or the United Kingdom, these are the two longest standing countries that have really gravitated towards commercial payment solutions. Let's take a look at what's happening here in North America. Back in 2007, total commercial card spend was in the $288 billion range. That's expected to grow to more than $415 billion by 2012, despite the economic climate that we faced over the last couple of years. Where is that growth really occurring in the commercial market space? When you consider corporate card, and corporate card is defined, Hannah, as a T&E program, that growth is really modestly in the 0.3% range. So we're not seeing the growth in corporate T&E that we have seen traditionally in the past because it's a mature marketplace. Most of the growth across North America is going to be occurring in the purchasing card space. So we're looking at the growth driven primarily in purchasing card, as well as single-use account cards or accounts payable integration. As you can see by the chart on the right-hand side that you have on the screen right now, the growth in that particular area is going from 2% to 14% of the total purchasing card spend in North America in just a few short years.
And Bob, I think this next slide speaks to just going into a little bit more detail about what you were just talking about.
It does. You have to think about improving growth rates. There are three primary areas when you talk about the commercial card space. You think about it in terms of traditional plastic cards distributed to employees. You also must take into account ghost card accounts, cards that you put on file with a particular merchant and allow them to charge that card when the goods and services are delivered. And then the newest entry to the market is electronic accounts payable programs, really defined as a non-plastic card used to pay for invoiced goods or services. That's where we're really seeing the growth rates on a purchasing card trend basis. Now, one of the things that we're seeing across the board is how are bank issuers and companies such as Comdata going out and helping their clients achieve these growth rates. It's by optimizing their existing card programs, looking for new categories of spend that they can put onto a card that they've traditionally just left off. They're looking for new ways to leverage in a collaborative environment the use of the card. Perhaps they've expanded beyond office supplies, event planning, computers, software, and hardware to now paying telecom bills, to now looking at new categories of spend and reoccurring copier leases, etc. Financial institutions are also looking for ways to cross-sell new solutions to their client base. I think that's something everyone in business is looking to do, is grow their portfolio and add greater value to the relationship. And when we talk about greater value, we're really talking about ways to demonstrate hard dollar savings to the bottom line through efficiency improvements, greater overall spend management, looking for greater visibility into where the money is going, and then accordingly leverage that information to go out and negotiate better pricing with your vendor market. So those are the things that we're seeing occur in the purchasing commercial card space as we go through 2011 and 12.
And following those growth trends that you just described, I'd like to ask the audience to participate in a brief poll. You'll see it appear on your screen right now. What are your plans for growth in 2011? Just select your answer. We'll give you about 20 seconds, and then we'll share all the responses.
Now keep in mind we talked a little earlier about the compounded annual growth rate in the commercial card space is expected to run in the 13% range. So we're literally seeing some of our clients today grow exponentially by 25-30% year-over-year growth. Not only maintaining where they are today, but looking for new categories of spend. So it'll be interesting to see the results from your poll, Hannah, as we go forward.
It looks like people are still responding. We'll give them a couple more seconds, and then I'd like to go ahead and share this poll.
So the responses are fairly in line with, one, people seeing opportunity. which is certainly demonstrating itself in the market today. But you can also see some cautious optimism related to the economic climate. Perhaps budgets have been reduced, tighter control on spend. So you see some of that showing up in your poll.
All right, so let's move on to the next discussion point. In any news situation, Bob, you'll always be faced with pressure from external sources. What exactly is going on in this space right now?
Well, there's a lot going on. This whole industry is going through a true transformation. Let's just take your example of regulatory pressures here. If you've turned on the television or the radio or read a newspaper in the last several weeks, you know that there's a bill in Congress right now which would dramatically change the debit market. Banks and retailers are waging a pitched battle right now over interchange fees, which merchants pay banks every time a customer buys something with a debit card. And we're all used to using those every day in our day-to-day life. The Dodd-Frank bill basically addresses the level of fees that a card organization can assess on an interchange. Let me tell you what that means. According to this Dodd-Frank bill, they are capping debit fees at 12 cents per debit transaction. That's nearly a 75% cut from the 2009 average of 44 cents. So this is the first time you're starting to see government regulation of interchange. Now, while that's occurred in some other markets outside of North America, it's really the first time that it's had enough legs to start standing here. The chief author of that particular bill is Richard Durbin. He's the #2 Senate Democrat in the House today, and he said he intends to oppose any attempt to delay this cap, as it would only, quote, line the pockets of the credit card giants and the Wall Street banks. So you still have some outgrowth of what we've been seeing over the last 2 or 3 years, and government bureaucrats coming in to talk about how they can reduce interchange. So that's certainly on the forefront. We're looking for some delays to occur in the House and have a cooling off period and a review of the actual interchange fees over the next couple of years, which is likely to pass, but certainly we're watching it. You look at other competitive pressures. Obviously, in any market, pricing pressures will be there. It's no exception in the commercial payment space. Competitive pressures. When I was in New York this last week meeting with MasterCard, Visa, as well as other major bank issuers, one of the things that we see is clear is the competitive landscape is changing ever so fast. Let me give you some examples, Hannah, of this. Facebook. Everybody gets on Facebook. Facebook now has formed a new subsidiary called Facebook Payments Incorporated, and it's registered in its host several states right now. It's filing for money licenses. You look no further than PayPal and people like Alipay in China, a company that started up just over 5 years ago that now has over 3% of the GDP of China running through its network. The tech world is abuzz today with the news of the upcoming services from Apple. It's leveraging the Apple iPhone with near-field communications, so you simply walk up to any point-of-sale device and the information contained in the chip on the phone will transmit the payment authorization through the network. So any electronic phone device can suddenly become the payment card of choice. You're also seeing Google very aggressively looking at this market. And if you've been to your local Starbucks lately, you see they're now using a mobile barcode-based service that works for free that can automatically debit the transaction from your phone to your credit card, debit card, or bank account. So the world is full of changing players. The landscape is certainly emerging in a very fast and formidable way.
Bob, let's talk a little bit about networks. Many would argue that there are 3 primary payment providers. What are they really focused on today?
Well, if you look at MasterCard, Visa, American Express, and to a much smaller extent to Discover, and then you look at other networks such as PayPal. They're all focused on one thing. That's to increase the number of commercial participants in their networks. How do you continue to grow acceptance? And while most of these, Visa and MasterCard in particular, quote 30 million worldwide participants in their network, American Express is distant to that. You see that that is continuing to grow. Look no further than Facebook with over 200 million participants in it, and you can see how a social network could become an extensive payment network literally overnight. They also are looking to grow the number of interactions between the participants in the network. So between buyer and seller, how do you create and grow the number of interactions? And then with each one of those interactions, they want to enhance the value of the information going through the network between those participants. So it's focused on three objectives: increase the network, grow it, and enhance the value going through the network.
Bob, I'll let you fly with this one. How do we get there?
Well, when you take a look at what companies are focused on today, companies must take a strategic approach to delivering customer value. It begins with effective communication and collaboration. You have to start by listening to your client, listening to market participants, your business partners, and other industry thought leaders to really get a sense of what the landscape is today and then what people are talking about for tomorrow. When you think about innovation, innovation is not the introduction of something better. It's really about innovating and improving the processes that already exist. So how do we leverage technology and strategies to innovate in new and different ways? We believe it's through collaboration with not only your internal resources, but external business partners. Some people would like to refer to this, Hannah, as co-opetition. On one hand, I'm competing. The next moment, I'm collaborating. So it's a healthy perspective of how do you evaluate your own core competencies and capabilities and leverage those of others to provide a holistic view to your client. So today's digital marketplace requires everybody to expand the use of partnerships driven through effective innovation and collaboration.
So Bob, you've been talking a lot about interactions, collaboration, partnerships. Can you speak a little bit more to that?
Well, let me tell you a little bit about what's happening when we talk about core data capabilities. Every one of the service providers today in the commercial card space is working diligently to enhance their data services. They believe at the heart of a transaction, the financial transaction, it's really about the information that's being passed from the merchant to the buyer through what is known as a merchant transaction. So that is the heart of it. But what do we do with that information, and how do we further enhance the core data? We do it through a series of information-based services. What do I mean by that? Well, you take a look at what's happened in the landscape of expense management reporting tools today. A transaction comes into that tool, and we ask the cardholder to go in and enhance the value of that data by putting a business description, by allocating it to a GL, by adding additional information which will provide value and insight to the company management team. There's also compliance management that's built around that. So if I want to ensure people are complying to my policy, I now have the opportunity to build in rules so that I can govern those transactions, have greater visibility, greater transparency to every financial transaction. All that leads to analysis, data analytics. Where's my business going? Who are we buying from? How much are we paying? What parts of the world are we enabling transaction activity to occur? And then how do we take that information and benchmark it against existing programs of like-sized companies? And are we, in fact, managing the process in an effective and efficient manner? Take a look at what a Visa survey 2 years ago basically released a global survey on the satisfaction and optimism of commercial card users. During that particular survey, they found 74% of the respondents were satisfied with their commercial card program. 50% of the respondents used commercial cards to pay for all types of goods and services, as well as help them manage their cash strategies. 78% were intending to reduce the number of checks over the next 12 to 18 months. If you take a look at what's happened in the last 2 years alone in terms of how do you enhance the value of an interaction, MasterCard has gone out and acquired DataCash. It's an organization that's driven to increase e-commerce penetration. They also went out and bought Orbiscom, a secure payments software company. Visa has recently acquired PlaySpan. It's an e-commerce network, and CyberSource, an electronic payment processing service. American Express recently acquired Certify, a developer of fraud prevention software, and Revolution Money that does internet payment processing. And they placed a minority stake in Concur Technologies. So this demonstrates to you the ongoing need for collaboration, innovation, and partnerships. And in some cases, you go out and acquire the technology to enhance the value of the interaction. And that's clearly what we see from a trending standpoint.
Great. And you've touched on this several times, I think, different innovations that the market has seen recently. So let's talk about some of these more recent innovations. What have you been seeing?
Well, through control, security, and ease of use, and those are the mantra for a successful program. It's enabled companies to feel comfortable with expanding their program, knowing that I've got the right controls in place, I've mitigated a risk, and I've found it easy for my cardholders to use and management to approve. The result of this is loss associated with purchase card fraud or employee misuse remains relatively insignificant and is accounting for 0.008% of the purchasing card spend. What does that really translate into? Fraud and misrepresentation is equivalent to $80 for every $1 million of purchasing card spend. So it's very minor compared to the benefits gained through streamlined business processes and greater spend control. But what these tools have allowed companies to do is grow their program. So let me give you a couple of benchmarking things to think about. If you're a Fortune 500 company, your average purchasing card spend on a monthly basis is around $5.2 million. If you're a large organization, your average commercial purchasing card spend is a little over $1 million a month. And then the average monthly purchasing card spend for a middle market company is in the $381,000 range. Now those are average. If you're a best in class, those numbers go up significantly. But it's because of the greater control, the reporting and online expense management capabilities. As we've heard, the trends for single-use accounts as an e-payable solution have seen dramatic growth and will continue to see that over the next 3 to 5 years. That with the advent of mobile technologies, primarily driven by the consumer market, and then moving up into the commercial space will certainly drive flexibility, ease of use for anyone that's engaged in that interaction. All of that has to be overridden by what do we do to continue to implement risk management strategies, real-time monitoring of transactions to ensure maximum security and control for everyone in the supply chain.
And following that, I'd like to take this opportunity to ask the audience one more poll question. You should see it appear on your screen right about now. Which of these key commercial card innovations has proven to be most valuable for your company? We'll give you 20, 30 seconds to answer, and then we'll continue the discussion.
Hannah, as we're finishing up the poll question, one of the things that I'd like to talk to you about and the group about is a little bit thinking outside the card and what are some of the techniques and strategies companies are employing today to get beyond the simple card itself and add true value and financial returns with the tools associated around the card.
That sounds like a great plan to me. First, let's look at these poll results that we've gotten from the audience.
So obviously, having greater control over spend, 43% of our audience feels like that's the most important innovation. I would tend to agree with that. And managing risk is obviously part of that. Advanced reporting and expense management tools continue to grow, and single-use accounts. It's good to see 3 years ago that wouldn't have even highlighted the screen, which I think really speaks to the mobile technology. We have not seen it present yet to make an impact in commercial payments. I think over the next 3 to 5 years we will. I think it'll start in the commercial, consumer space first, and then migrate its way forward.
Great. So moving on to what you had just mentioned, thinking outside the card. What do you see going on here?
Well, I think as you talk about value and how it transcends the actual financial settlement transaction, it's all around controlling how, when, and where the payment can be executed. And I think our customers today and the people participating in this session spoke very loudly on the last polling question about the importance of control. So it's control about the financial transaction, how, when, and where it can be executed. It's about the amount of data associated with each transaction. And then the value around the transparency, the process of complete visibility to a decline, transparency to real-time transaction information, the ability to review and allocate and subsequently approve each and every financial transaction at any level within an organization has become paramount with the use of expense management reporting tools. And then a seamless integration back into your financial system really drives a complete seamless integration. Analytics and benchmarking will become a standard part of the program management strategy going forward. At Comdata, we've made a benchmarking tool available to our clients through the comdata.com website, a program optimizer that we've partnered with MasterCard and the Aberdeen Group, where you can go in and put in your values, and it will benchmark your program against others of like size in your industry and give you a best practices roadmap for how to continue to grow your program and achieve greater levels of savings. Innovation, really innovation around a one-card solution. In the past, you've seen a card for fleet, a card for T&E, a separate card for purchasing. They can run on different platforms. Today, we're seeing the consolidation of a one-card solution running on one platform, and then just configuring the card to meet those individual needs. Mobile pay, and you're starting to see the willingness on behalf of the merchants and the buyers to use it. Payment systems with expense management reporting continues to be hot. And then marketplace learning really spurs innovation. Number of clients, the number of trends we've seen recently creep up are a trip-by-trip dynamic card funding. They want to be able to give a user a card, and then as they go on each trip, they want to load the card with a value and have it decline. Or have a declining balance-based card for a project. I'm going to send my associate to run a convention or a meeting, and I want to give them a budget. So they load the card with a value of $10,000, associate it with a particular GL code and event planning number, and once that card has a value of 0, then the meeting is over. So there a lot of innovation is spurred by listening to the marketplace.
So Bob, we've all heard a lot about leaving the check behind. That's something I'd like to talk about next. How would a company go about migrating to electronic payments?
Well, you brought up the topic of the day, and that is how to leave the check behind. This was something that MasterCard has clearly in its sights. We heard it continually positioned as the movement everybody is looking at in the commercial payment space going forward is how do you migrate to an electronic payment methodology. So what we've shown on the screen here is a depiction of that. How do we reduce the cost of manual payment processes by moving those settlements from check to either a single-use card number or an ACH, or international payments go into wire. So the methodology here is simple. You, the buyer, transmits one payment file to a host provider such as Comdata. You continue to keep your Treasury Bank relationships in place. Your banking financial institutions can be numerous, and that's fine. But one payment file comes into Comdata. We separate those files on your behalf. We send out single-use card numbers with a remittance advice to your suppliers that are on that payment method. We subsequently do the same thing for all your ACHs. The ACH is an instruction. It tells the bank to transmit the ACH to your supplier. Same thing can happen with any of those checks that still exist in the system. We can print and distribute those on whatever bank account you wish us to. What we're trying to do is create a holistic view between buyers and suppliers. Suppliers simply log into a portal. They can see all the payment settlements that came to them from their various buyers. They have a complete remittance advice regardless of whether it was transmitted to them via ACH or single card or check. They can take an upload file and upload it directly into their AR, making it simple for them and creating a value for the supplier. So Comdata's strategy here is to become an agnostic payment solutions provider that supports your existing treasury relationships, that seeks to move as many of your manual check processes to electronic single-use cards as possible. Those that are not viable candidates will be moved to ACH, or you'll simply transmit the ACH instructions to us for movement, and it will handle any ancillary check print functions that you need if required. Those can be bundled or separately done. Cost reduction, we believe it gives you greater savings and efficiency by going to one common portal rather than an individual bank portal. Companies today are changing banks on a regular basis, and they're adding new banking partners. Why would you want to go through educating your staff on each and every bank portal? Why not come to one agnostic portal for multiple banking relationships? We think it makes sense. That seems to be what our customers are validating for us. It's just a strategy that's available today. We believe you can improve fraud detection and reduce errors, automate the labor processes, and let's become more efficient. That's the process of migrating to electronic payments. Any questions on that, Hannah?
No, I think you covered it. Sounds like some great benefits there. So let's go back to thinking outside the card. We just talked about electronic payments. What happens after we automate the payment process?
Well, once the payment is automated, we're really talking about the next level is to take it to an electronic order-to-pay network that brings buyers and suppliers together in a shared environment for the purpose of facilitating the commercial transaction itself. So how do we enable a smooth transition to electronic payments and invoicing? One sole purpose: how do we help cut costs, capture early pay discounts, control our cash flow, and eliminate paper? We believe this can be accomplished by connecting buyers and sellers to a common exchange for electronic PO issuance, automated vendor receipt and acknowledgement of that purchase order. Once fulfillment is completed, then electronic invoicing and electronic settlement take place. This obviously requires internal collaboration and process re-engineering from the way it happens today. It requires vendor engagement and complete executive buy-in across everyone involved. So these types of applications exist in the market today, and over the last 5 to 6 years there have been a lot of talk, and I'm sure many of our participants today have seen these types of applications presented. Because it is such an extensive change and transformation for many companies, they've resisted going down this path. I think in the next 3 to 5 years, though, you will see a continued consolidation of how do we electronify the financial supply chain and complete the whole order-to-pay process in an automated fashion. And that's what we're seeing, that's what we're hearing when we were in New York last week. This seems to be where the industry would like to go. It certainly develops some stickiness between giving value not only to the buyer, but value to the seller, and there needs to be a fine balance between those two.
Well, Bob, this has been really great information. We've gone over a lot of it, and I would love if you would be able to just summarize kind of the key points, your key takeaways from our discussion today.
Well, Hannah, I think we've seen that we're in an ever-expanding market driven by economic necessities to become more efficient, more cost-conscious, and more resourceful. Organizations are using technology today and existing network infrastructure to deliver innovative, holistic solutions in the commercial payment space. However, we're facing new players, new regulatory changes, and the rapid emergence of social networks. We've got to continue to evolve. Status quo is no longer acceptable. Each of us and our organizations are going to be required to change, to understand what will work, how we collaborate with others to obtain the information we need to drive profitable decision making. It's about transparency, convenience, and automation. We've got to be a part of it. We've got to leverage innovation and information and embrace the change, and then and only then will our organizations be able to reap the rewards of participating in the digital economy.
So, Bob, before we go into a question and answer session, I wanted to include a couple of key points for our audience to be thinking about. Bob, say I'm a client and I'm using a commercial card today. What do I need to look at to continue to grow the success of my program?
I think it starts with having executive sponsorship. Any commercial payment solution has to have support and sponsorship at the top of the organization. So it starts there. Then you must define your requirements. Whether you're talking about you have a fleet of vehicles, you have needs for your travel, you have unique purchasing requirements, and you want to move away from manual check. Each one of those particular areas can have its own set of unique requirements, and they must be clearly defined. And then build a plan to address each one specifically and from a holistic standpoint. Then it's important to effectively execute that strategy with good internal communication and collaboration between departments, and make sure you're connected with a common message, a common theme across your organization. Once it's implemented, then you have to monitor its progress and report. So not only are you looking at each of the spend categories, but how are you doing against industry benchmarks? And look to continuously improve by benchmarking your program against that of others.
Sounds great. Bob, thanks once again for sharing your expertise with us today. I would like to move on to the question and answer session. We've already gotten a couple of great questions so far, so we'll get to those in just 1 second. Again, to ask a question, please click on the orange arrow on the right side of your screen to open your control panel. Type in your question and hit send. If we are not able to respond to all questions today, we'll follow up with you individually after this session. So, Bob, I'd like to start with the first question. We had someone ask, where can I find additional industry information or best practices guides?
There are a couple of industry associations or affiliations that you should be aware of. Specifically in the purchasing area, the National Association of Purchase Card Professionals. That's the napcp.org. It's an association, and they've got well over 1,000 members. They have an annual conference, which happens to be coming up next month in Las Vegas, and they provide a wealth of information as well as benchmarking studies on their website. You also want to look at the IAPP, the International Association of Accounts Payable and Financial Professionals. They have their own distinct website and their annual conference. Comdata and MasterCard have worked together to come up with best practices guides as well as implementation guides on not only commercial purchasing cards but corporate cards as well as fleet cards or a one-card solution. And those are made available just for the asking. And you can get access to those by reaching out to your customer service representative or letting us know, and we'll be happy to send one right along to you after this call.
Great. We also just got a question in that says, did I understand correctly that we can use a virtual card to pay vendors who still require a check?
Yes. The trend to move away from check processes to electronic cards is upon us. We're seeing vendor adoption rates well into the double digits. This can be accomplished in one of two ways. Comdata provides a web portal. You simply log on as an authorized user, type in any information about that particular settlement, invoice number, payment number, along with the amount you wish to transfer to that particular supplier. We will then generate a single-use card number on the web portal along with the expiration date of the card and allow you to enter an email or fax number on the screen. And that information will be delivered promptly and reliably to your supplier, who can then simply key that information into their point-of-sale device and receive settlement. If you're integrated into your accounts payable area, we have a complete integrated solution which allows you to simply transmit a file to us, much like you're doing to the bank today with ACH. When we receive your disbursement file, we'll send out complete remittance information to each one of those suppliers, along with a single-use account number for them to process. Once they've done that, we'll send back a positive pay file, which will allow them to reconcile totally in an automated fashion.
Sounds great. Bob, we have a couple of questions here about starting a purchasing card program. The first one that we have is, what are costs associated with starting a purchasing card program?
Well, the cost associated with starting a program really becomes with identifying the requirements of your program. Once you understand the requirements, things to consider would be, do I want a custom co-branded card? If a customer does not want the standard Comdata MasterCard but wants their logo on it for larger orders, there is a small fee for that. Typically $1.50 to $2 per card and 1,000 card minimum. Is there integration work that's required? While our programs provide standard output files, it could be that your ERP requires a custom file format, in which case you need to account for that. Will there be any programming requirements? And if so, let's put a number to that. There'll be education that'll need to occur with your cardholders. Who is going to put that educational material together and distribute it and train the end user? In many ways, that's a collaborative effort between your issuer, Comdata in this case, and the client. But those are things that you need to think about. Outside of that, there are really no transaction fees. There's no standard cost for expense reporting tools and things like that. So it can be a very minimal amount, but certainly not expensive.
Great. And this question is also about starting a purchasing card program. It looks like this this person does not currently have a purchasing card program, interested in starting one, what are things to consider as I'm presenting this as an option to executive leadership? And Bob, I think you've touched on a couple of these things throughout our discussion today, but maybe you can clarify a little bit.
You obviously want to start with a business case to take to your senior leadership team. So what are the areas within your organization where we see the low-hanging fruit exist? Things like office supplies, things like telecom expenses, things like computer equipment. Miscellaneous expenses are laying around the company which can be easily transitioned to a purchasing card program. So let's identify those opportunities and quantify the savings that can be achieved by moving it to a program. There are statistics that are available that would point to the fact that you can save between $30 and $75 per transaction by moving it from a very manual-based invoicing solution to a purchasing card. So if you took a very conservative approach and said, well, it's $30, then you would look at the number of transactions times $30 and multiply that out. You would also take a look at any incentive rebates that might be available and add that to the mix, and build a business case that you can take to your senior leadership team which quantifies the savings and the revenue that's generated from these programs. And we have calculators that can assist, and we'll be happy to sit down with you and model it out so that you can get senior buy-in. Once that's done, then we have complete implementation guides which walk you through the series of steps that are required to launch an effective program to everyone in your organization with good communication.
Great, thanks, Bob. Bob, what are you seeing in terms of how purchasing cards are used? Maybe if you want to go over some common vendors that you've seen, as well as some unexpected situations that you've seen.
Well, I mentioned earlier that there were some 30 million vendors or suppliers worldwide that take a commercial card program today. In North America, the number is over 8 million. So when you think about the common ones, we've mentioned them here today. Who are the type suppliers that you're paying? It may be your print supplier. It may be your waste management company. It may be your uniform company. It may be your asset provider. It could be your computer peripheral company, your office supply organization. It could be the maintenance organization that serves your building, or the lawn care service. The list goes on, and we have an example of merchant categories that take the program, and would be happy to provide that to interested members today. We can start off with receiving a vendor match from you. We take your vendor database and we match it up against the current MasterCard acceptance database, and can come back to you and say 75% of the vendors in your vendor database today are currently accepting MasterCard as a standard form of payment, and that's a great place to start the benchmarking.
Great, Bob. Our next question is, what is the average transaction on a purchasing card?
The average transaction on a purchasing card today is about $275 to $285. If you look at a T&E transaction, it's somewhere in the $125 range. A fleet transaction is going to be in the $70 range today. Gas prices have certainly crept up over the last few weeks, and I think anyone that's been to the pump, even with a 20-gallon tank, will realize what an impact it's making on their particular purchasing capability. So what we're seeing today, just to demonstrate what a dramatic improvement single-use card numbers have played in the market, where the average purchasing card transaction is $275. The average e-payables transaction is in the neighborhood of $1,500. So you can see how you can expand your program and your revenue share exponentially by taking in this new category of spend that's waiting and available for you today.
Bob, we have one more audience question, and again, if anyone out there has any further questions, I invite you to go ahead and submit them via the question and answer tab on your control panel. For now, our final question, Bob, is can you expand on your comments about how mobile technology is changing the payment space?
I think the easiest example to share how it potentially is going to change this payment space is the Starbucks example. Starbucks today allows you to download an app, a Starbucks app, to your smartphone. When you associate that application or that app on your phone, you associate it with a credit or debit card when you register it, or to your DDA account, your direct debit account. So now when I walk into Starbucks for that morning cup of coffee, I simply pull up the app on my telephone, show it to the Starbucks representative, who will take her scanner and shoot the barcode, and it will automatically debit those funds from that account. I don't have to reach into my wallet. I don't have to worry about whether my purse is with me. It's paid for, and now they're linking that payment to rewards. And so how many rewards have I put on my, quote, Starbucks app and my Starbucks code number? And they will reward me for all the times I go into Starbucks. That's going to continue to proliferate itself in ways that we can only imagine.
Well, Bob, I said that was the final question. We have another great one that just came in. How do the rebate incentives work?
The rebate incentives with our organization are straightforward and easy to calculate. That can't be said for your relationship with other card issuers. This is a place where you need to pay particular attention because there are gotchas that can exist. What are some of the gotchas? Then I'll tell you how it's calculated. Some organizations will say you must have a minimum dollar spend value per card. Some will say that you have to have a minimum spend threshold for your entire program before the rebate kicks in. Comdata tries to approach this with a simple methodology. Based on an understanding of your charge volume, we'll give you a fixed rebate amount. So let's say that based on your current volume estimates and the way you pay Comdata or remit on our invoice, that you've earned a 1% rebate. We'll simply take your monthly charge volume, $10,000, and multiply that times 1%, and you'll receive a check back for $1,000 at the end of the month. If next month it's $200,000 times 1%, then the check would be for $2,000 the following month. That's consistently paid based on your charge volume. It's very simple, it's very straightforward, easy to calculate, and there are no gotchas. That's how the rebate incentive program works today. So I hope that clarifies it for everyone.
I think that was a great answer. Once again, I would like to thank everyone for joining us today, for asking great questions. Bob, thank you so much for being with us here over the last hour. Bob will be linked on LinkedIn this afternoon responding to any post-webinar questions that you have, discussions you'd like to begin. And if you are not already a member of our LinkedIn group, just search for Comdata under the group category on LinkedIn, and you should be able to join us from there. Also, I wanted to let you know that we'll send a recording of this session later this afternoon via email. And on behalf of Comdata, thank you for your participation and time.